Hi, everyone. Who's ready for the NFP? Who's ready to react to the reaction? Hi, Richard, Brock, Hugo, Alexander. How are you? You guys ready?
Morning, Dale.
Hey, Ryan. How are you?
Yeah, how am I sounding?
You sound perfect.
Wicked.
Yeah. So you're ready. Yen held where it had to, right?
Yep, sure did.
So far, we'll see what the number does. Also, I just want to point this out. Even though S&Ps are lower, we're over 45.55. Okay, so this is what Blake said he's bearish underneath. It's not underneath. It's holding breaks. Ryan, I think a lot of people are kind of discounting this break and new highs in the S&Ps. Even the bears are looking for new highs in the S&Ps. And I think there's a possibility for a failing rally up here. I'm not an Elliotician, but I talk to a few. I know you talk, with everyone in the chat room and probably your contacts, but they're calling this a 5-wave structure down here. This big break was 5. So, that's what I'm saying is that there are a lot of, even though it's come down on the DSI, the stock indexes, everyone I talk to, even my buddy Jim Walsh, who, actually called the highs up here, is looking for a new high into the new year. That seems to be the consensus, that this is just a pullback before new highs. And then, I have super bulls like Dave H. Contrarian looking for, 5,300 to 6,000. So, I mean, even the bears are looking for new highs. I think the big miss would be that people waiting for new highs will be buying dips all the way down if this is the beginning of a correction. What do you think?
Yeah, I think it's twofold. I agreed a bit with what Stel said yesterday. There's probably a bit of the taper coming in here. I don't think it's a full-on taper tantrum because it made all-time highs after we had the Fed meeting announcing it, but the Fed seeming want to go a bit quicker. That could be getting a few sellers coming in and saying, right, all right, we haven't got as long to get out of this free money. But on the flip side, I think if we get confirmation in the next week or two that this Omicron isn't as bad as feared, boom, I think that's that's the main trigger for stocks shooting up.
Okay. All right, or it could go the other way.
Yeah,
I mean, right now we're not exactly hearing bad news about it, except that it's here.
Yeah.
And I don't know, maybe I'm just too jaded, but I don't think governments want to freak people out 2-3 weeks before the Christmas shopping season.
No, but they're doing that in Europe, aren't they?
It's a little different. Yeah.
Europe's a little different because there were countries locking down anyway. Austria being one, Netherlands being one. They were locking down before this variant came out. So this is just adding to that. So there is big worries of lockdowns in Europe, and for me, that's potentially another tailwind for the central bank trade, because if Europe is going to see some lockdowns, that's going to push the potential recovery out and the tightening by the ECB potentially out a few more months. That's going to bring the divergence in with banks like the Bank of England and the Fed, who are going full steam. I mean, we've had one BOE member today just saying the Omicron might put a bit of a caution in his view. He's one of the voters for a hike, so he might be a bit more cautious going into December. This is how they're going to start thinking on the cautious side.
The interesting thing about what Paul said is that actually, if we have a COVID spike, it actually can make inflation worse because of the labor shortage and the bottlenecks. And that's from his mouth. I'm not saying it, but he said it.
Yeah, what an expert,
therefore, COVID's not an out for them not to tighten, is kind of what he's saying.
Yeah, experts now, they couldn't predict this last year, could they? Or coming into 2021. But now they've seen it happen. It's what's it called? Shutting the door after the horse has bolted, isn't it? Now they're all experts on it. I pointed out this morning, Lagarde, she said, oh, yes, we project that inflation will come down in 22. So I pulled up the projections for June and December 2020 for their 2021 inflation calls. It was 0.8 and 1.1, I think.
Yeah.
And here we are with inflation at the end of 2021 at 4.9. So that shows what their projections are like.
Okay. And Jane, you were saying in our meeting, Apple has 3 drives, not quite, but it will at new highs. And Jane saying the monthly candle, I haven't even looked at a monthly candle. Is it the month? It must have been the November. Okay, so it's probably the November monthly. Let's get out the telescope, Ryan. Let's see.
Find it out.
Yeah, it's hard to see, but this was it, and it's hard for me to see if it's ugly. It was a little mini reversal, and we are getting some follow through. Anyway, I think that's a surprise, is that the market has topped for a correction deeper than most people think it can go.
Hey, Dale. Good morning. By the way, happy Friday. Good morning, Ryan. How are you?
Yeah,
I didn't want to jump. I didn't want to jump in, but you pulled up a chart that I actually happen to be looking at yesterday on the S&P monthly chart. It wasn't my intention to be looking at that, just because I know exactly what the monthly candle looked like last month. It was ugly. But I was talking with Jake Wojastik from TrendSpider, and Jake.
Oh, Jake. Jake.
Yeah, he's great. He was talking about like how this is a bull he's kind of like found it. I think the market's kind of caught him a little choppy, so he's swing trading, and he's a pretty predominant bull, which he's been obviously right, but he's actually been he's kind of taking a step back. And the one thing he pointed out yesterday to me, and I wasn't even paying attention to this, that if you go back to I believe it was January of last year, we had a bearish reversal candle too, back on the S&P, and it did reverse. It looked great. And then
I remember that. This one right here.
Yeah, it was ugly, and market got sucked into that, on the short side, and we reversed pretty hard. So I mean, and it's interesting. You talk about so many people targeting higher now, and I see, or I hear what you're saying, and I think that all we need, Dale, and all we need, Ryan, is we need some weak data. I'm actually hoping for weak data today.
Okay.
Yeah. How about you, Ryan? What do you hope for, other than
world peace?
Santa Claus. Oh, here comes Stelios. Stelios hopes his daughters stay non-teenagers the rest of his life, and that too. But we don't even need to go there. Stelios, good morning. By the way, what are you guys thinking today? I gotta throw it out there, and Dale, I'll go ahead and grab the screen here.
I never hope. Right. I never hope when it comes to trading.
Well, come on, let's hope for Santa. Everybody wants to hope for Santa.
Hope is the oxygen in life, Ryan, but the carbon monoxide in trading. Huh?
I hope for volatility. That's what I hope for.
Give me that,
and I can have a trade.
Volatility. We might get some volatility if we get a weak number, because if we get a weak number, what's that going to do? What's that going to do to currencies? First of all, I think a weak number will spark some
dollar selling.
It's going to spark some dollar selling, but it's going to spark some stock market recovery, right? So if you're looking at like, I've had my eye on the Aussie. Everybody here should know that the Aussie's been hot on my radar, looking for a big reversal around the 70-cent level, generational low. I've talked it to death, and we're finally here. Yeah, well, it's chart of the day yesterday, but I mean, we've talked it to death here for the last couple of months. So you guys know I've been, short, 200-day moving average being short, targeting down here. I didn't know how we were going to get down here. And I'm actually surprised we're as strong as we are in equities and down at these levels. But that's neither here nor there. We're here now. And, I'm thinking, hey, if we do get a weak, data print, the Aussie might scream back above 71 cents. And next thing you know, we have a false breakdown for the week. And that would be a pretty big reversal. But you know what? That's kind of what I hope for. But are we going to get weak data? What do you think there, guys? Ryan, let's start with you since you were here earlier. What do you think?
I don't know. I think I've gone for a higher number than you have in the NFP competition.
Well, of course you did, because you're just going opposite whatever I do because I suck at guessing NFP. So, but for real though, what are you thinking here?
Yeah, I think we could get a good print. Perhaps we'll see some holiday hiring coming in. We know the labour markets have been tight, and perhaps we're coming to Thanksgiving, Christmas, all the two holiday.
Well, you saw the holiday job I got, Ryan, right?
What was that?
In Blake's front yard. That's me. Pay me $10 an hour, man.
Hey, you know what? I'll tell you what. I put my Christmas lights up, and my kids were so happy. My kids are late teens, and they're so stoked that Christmas is coming. So anyway,
how tall is Santa there, Blake?
The one out front of my house.
Yeah, me.
He's a good 20 foot tall.
Wow!
He's
a big one. Dunk a basketball then.
Yeah, he's a big one.
Get him on face next week, Dale.
Anyway, but okay, so you're expecting, you're talking about like holiday numbers. Let's around here, as long as people are hiring at the gas stations, I think for extra help, that might be it. But no, I hear what you're saying. So you're expecting maybe a strong number. Data should be good. The one thing that if we get a strong piece of data, do you think that that's all bad? Because for me, I actually would take strong data today, because you know what it would do for me? And this is how I'm going to play it. By the way, this is the first non-farm payroll I'm going into with like zero exposure. Like I have like nothing on. I was long dollar CAD last night. It was like one of my last trades because I picked it up yesterday at like 128, 128.03, I think was my average. I sold it last night at 33. If you guys,
very nice, yeah.
Yeah. Well, if you were in the chat room, or in the trades room, excuse me, I took my dollar Canadian off at 128.33 last night. I booked it because I was sitting in the stands, freezing my tail off on the other side of town during my kids' soccer match, and I'm just like, I took it off because I knew we were probing up against resistance. I posted the chart and everything while I was mobile, but I took that off because we have obviously Canadian US data. I can go into this chart here in a second, but
crude turned too, Blake. Yesterday.
I'm sorry.
WTI turned up yesterday.
Yeah, so there's a few things that could influence the Canadian. We can talk about that. We still have 15 minutes to really discuss all this. But one of the things that I wanted to say is if we get a strong piece of data, the dollar. You guys know that stocks or people in the stock market are constantly bullish. I mean, at this stage of the game, we're in a very strong bullish trend. So they find any reason to be bullish. And let's talk Santa Claus rally, seasonals, whatever. People are going to find a reason to find a strong number being bullish the stock market. So I think the couple risks right now are if we get a weaker number, that's going to feed into that narrative that the Omicron, even though you guys know from this whole week, I really don't care about this COVID variant. I think we're just going to brush it off. It's no big deal. I'm just saying, even if it is more severe, it's not going to lock us down. So even if, there are more deaths and it's more transmissible, people just start wearing masks again, more often. We're not going to shut down any businesses. So I don't really worry about the COVID variant from a market standpoint. Not saying from a health standpoint, just from a market standpoint. But the thing is if the COVID variant is still an issue for the Fed, they think it is, and we have a weak jobs number, then the Fed is going to be less likely to taper more aggressively this month. And everybody's expecting this month for the Fed to pick up the pace of tapering, right? So if we do get a strong jobs number, that's going to reinforce the idea that the Fed is going to continue to taper more aggressively. What that would do, if you're looking at the euro here on my screen, that would push the euro below, this triangle support down towards 112. I'm thinking 112.50, maybe 112.20, and then I'm going to be looking to go long, because I actually think that the market will go there. The market might come off a little bit, thinking strong data, Fed's going to taper more aggressively, blah, blah, blah. Stock market comes off a little bit, and people will say, well, the economy is strong. We already knew that the Fed's going to, tighten, tapering. And that's the whole reason why the stock market really brushed off Powell's comments this week about inflationary, transitory being, he's ditching the word, retiring the word transitory, because we already knew that was coming. We already know that tapering is going to pick up right now. The only risk right now is that jobs data starts to get weaker and the Omicron variant becomes more of an issue. That's really it at the moment. I don't think we have, but if that is the case, then, we might see stocks rally to new all-time highs. Well, so anyway, those are just my opinions. And so how I'm looking to trade the non-farm today is I want to buy the euro at 112.50, or if we break out above this triangle resistance, I'm going to get long for a break. And if you guys can't see it, that is not a penis pattern. That's a head and shoulder pattern. Okay. So, all right, I'm done. So Stelios,
yes.
What do you say? What say you?
What say you? Okay.
What say you?
So we had yesterday, what do we know? We know that the Fed are going to be finishing their taper and possibly hiking by next year. We had yesterday Bostic and Clarida affirming what Powell has said, which was that if data is still doing well, and the economy still looks like it's doing well, they're going to bring forward the tapering. So they both said yesterday that they would be perfectly okay with finishing the taper by the first quarter now of next year. So Aragorn,
it was like mid 2022. Now we're talking first quarter, huh?
Potentially, yes. So we have known this for a while, that inflation is no longer a problem in terms of low inflation. So inflation is high, so the Fed is free to tighten. Significantly, I would say, but they're free to tighten. But the only question mark was employment, and they've told us that, and they've said that if employment continues to be strong, then there's nothing to stop them. So I think today, with a strong number, that will definitely cause the market to bring the taper forward to the first quarter of next year, and to bring hikes forward. Remember, the market's pricing one full hike by, I think, July next year, and another before year end. So we're pricing 50 basis points for next year. We are getting now dangerously close. And I think on a strong number, we're going to get even more dangerously close to a level where it's really very difficult for the market to be pricing more aggressive tightening by the Fed. Of course, it's not impossible. We've seen a lot of strange things happen, but you're getting to a point where all of it is now getting priced in, and yes, everything's going to go according to plan. We're going to be tapering and hiking and everything. And then you have Omicron or F.A.C.E, TAF, whatever, all those letters that might come up. And, you might get a reason for the Fed to kind of pause or take a step back. So I think we're getting to a point where the dollar is going to have all the good stuff priced in, and the other currencies
weak data.
So actually, I want to
win the NFP contest. Weak data.
I want strong data so that we can get the euro dollar below 112, which I think is going to be a great risk reward long. But
all right,
Anyway.
Below 112. That's a big call, Stelios. Now, just
I'm not saying today. It could happen today, but
I know. I just want to reiterate, guys. One of the reasons why I'm pretty bullish the euro down here. I know I've talked this one to death too. This is a 13-year trend line in the euro dollar. This every time we retested it, it's been worthy of a bounce. And I played it on the long side last week, around the one, I got hit at 112.50, and I played it on the long side. I'll play it again down here at 112. And if we get below 112 and Stelios is right, I'm going to kiss you from across the oceans. Well, you're in the Aegean Sea. So across the sea, and then I'm going to buy the euro as well. For the Greeks. All right. So Ryan, what do you say? What say you?
What say me?
What say you?
Yeah, I'm in pretty much agreement with all you guys. How I
approach these. No, I want you to disagree. Please disagree. I agree to disagree. No, just kidding. Go ahead.
How I approach these events, we don't know what the number's going to be. We can all guess till the cows come home. It's a lottery every month.
It is.
We know that.
Great.
So what I tend to do is I tend to get into the charts, and you can see that I did that in the chat room today, about 10 minutes ago. I look at the levels, I see where the ranges are. Take euro dollar, we're bang in the middle of 112, 114. That's the main edge of this sort of short-term range. If the data is, here or there, roundabout, and we get a move to either of those edges, then I'm going to be looking to get in against those edges, because the news isn't big enough to break them, in my opinion. Then again, if we get news that is big, then we have to see, are we going to break those edges? And if we're going to break those edges, then potentially that's a trade to go with, because they're big levels. So I go through my dollar pairs, and I pick my levels where I think the bigger levels are, where the resistance is, where the support is, and I let the price do the talking. I say to it, right, well, there's the numbers for the NFP. Go on, price, show me what you want to do. Do you want to hold those levels, or do you want to break those levels?
Yeah.
And, forget what my view is on the longer term. That's secondary. But just for trading the event itself, let the price show you where it's going to go, where it's going to stop, and where it's not going to stop. And you make and adjust your trades accordingly based on that.
All right. Well, you're no help. Dale, what do you think? Just kidding. I know. Hey, you're Ryan is a heat of the moment trader person. And that's one of the things I love about you, Ryan, is that you approach with a very, you're very straightforward approach when you're trading. And it's all about risk reward levels and managing risk. That's it. So, that's the way it should be.
Yeah.
So Dale,
none of us can do anything about what the number is. So just trade what it is afterwards. Don't guess in before it and lose money.
Yeah. And like I said, this is one of the first times I've come in with like zero exposure. And I'm looking at the dollar index. I still think the dollar is very bullish. This is obviously just opposite the euro. We got a little head and shoulder pattern developing in the dollar triangle forming. That's consolidation. This consolidation should put us at the upper end of the channel, the longer term channel, and resistance, or break below this and we threaten the neckline. So the dollar index is pretty straightforward for me, but overall I'm very bullish the dollar. I just hope we get a dip down to 94.50. If we get a dip down to 94.50, I'm going to be long like Donkey Kong, but I don't think that's really going to be happening anytime between now and the FOMC. But I think today's trade in the dollar index is either a break higher, break lower, but you know what to do. We get up here, you probably want to sell it, and we get down here, and then you want to watch for a possible breakdown over the course of the next couple of days. I think that's what it all really boils down to. Dale, did you have any opinion about gold or the dollar? Because we should look at the Canadian here in a second. Go ahead.
I'm in Stelios's camp, and the Dixie that you have up there hasn't fulfilled the objective from that formation. The breakout being tested at 93.5. That was the level, and it measures 97.50 to 98. So still waiting for that.
You want to give my I'm going to give you my prediction for 2022, as useless as it is. I just think that any move up to 100 in the dollar index, you want to fade it this next year. So
Yeah, I agree.
That's my opinion. Because I don't think we're going to take out.
I think it could be the trade of the year. People fleeing the dollar now that all the dollar bears for a year have been taken to the woodshed.
Yeah, I think it's quite possible. And here's the thing, I'm just gonna throw this out there. I do believe in dollar diversification and debasement, if you will.
Yeah.
I think that the dollar is over the longer term being used less and less and less globally. So I do think that the days of dollar supremacy are over. And, like I said, we get a rip up to 100. I'm going to be a seller of the dollar. That would put the euro probably closer to 105 or somewhere in that neighborhood. But anyway, here's the dollar Canadian, and that has nothing to do with what we're doing today. This has everything to do with what we're doing today.
So guys, can I just, it's Kman here. Can I just?
Oh, Kman, good to hear you.
The data that we are seeing today are taken pre-Omicron. So there is a chance that the market looks through good data, unless they are really very good. So that's just my thing. I still think we get good data. I'm a little bit long yen crosses, not so much dollars. I have an option running in dollar yen, but that's like started to be hedged. But just
you're talking. I'll just point out the euro yen and kind of my view on the euro yen here. So there it is. While you're talking, so you're long some of the yen crosses. What else are you thinking?
Well, as I said, as long as the number is above 250K today, nothing changes. I still think the dollar will end the year on a good note, despite all the seasonal calls, and that's about it. But we are on pretty important levels on the yen pair, so I'm long very close to the supports, and I won't refrain of cutting some of it if the number really comes out very bad.
Under this week's lows came in.
Well, the euro yen is 127 half 3/4, the big zone. 76.70 on the Kiwi yen, 88, 87.90 on the Canada yen. That's a pretty decent level. The Canada will be fun because Canadian dollar usually tends to move more on distorted numbers.
Yeah, and we're really probing the 618 in the fib retracement right here in the Canadian yen, holding it. And here's the thing, guys, if you don't know, Kman, he's part of the Forex Analytix team. He's in our chat room. 40 years of experience under his belt, spent 5 years in Japan on the boots on the ground in Japan on a dealing desk, trading currencies, plus, his other 30 plus years in banks over the years. So get his experience in the Forex Analytics community. Thanks, Kman, for your opinion. But you know what? I want real quick. We have 3 minutes before the data comes out. Anybody have an opinion about the dollar Canadian? I was long above 128, sold it last night up against the highs. I think we're in this channel. I think there's a risk we trade the lower end of the channel down to 127.60, maybe to the upper end of the channel, 129. It is bullish until proven otherwise. I have no opinion on the data coming out other than, Canada is looking for, another strong print for 36,000. Anybody got a opinion here?
Yeah, it looks like the market wants continuous confirmation that everything is going well in Canada for Bank of Canada to react. So again, probably a worse number being the bigger risk for today.
Yeah, notice how we broke that trend line here. We thought it was a triangle developing. So a good headline number is the risk, which could push the dollar Canadian lower, especially if we have some weaker US data. So if you guys are Forex Analytics subscribers, you guys can run over here to your calendar, open Data Flash so you can see the data as it's being released. I'm going to actually pull up. I know the Aussie's on my radar. That's the one I really want to be looking at. So I am for my own personal gain, but I'm going to put the Aussie up here, right here. And I'm going to put up the dollar yen, which tends to be the most yield and, 1 minute chart's fine, actually. So let me go back over here. I'm going to put a 1 minute chart for the Aussie. Actually, I'm not. I'm going to put it in a 15-minute chart for the Aussie. I'll keep it a 1 minute chart for the dollar yen. It tends to be most sensitive to the numbers and to the data and to yield. So here we go. How much time we got, Stelios? Where's my countdown clock?
30 seconds.
Thank you. All right, guys. So I'm just hoping for some data to push us around. Some good. I just want an outsized number. Can we get an outsized number, please? I don't care. 200,000 on either end of 500K would be great. That gives us some volatility, right?
All right, let's go.
Crapshoot. Let's do it. Who's going to win the lottery? Oh, God.
What the hell?
Woo. Wow. That's some
210.
US
Revision 546. Yeah.
Okay. Well,
that's a bad number.
That is a bad number. Any which way you slice it. So, yep. I'm trying to get long some euros and I'm having a difficult time doing so.
Check the unemployment rate.
Dude. Oh my God. I got rejected on all my orders. This is so.
Yeah.
Come on.
Higher participation rate and a lower
unemployment. Yeah, that's really good actually.
All right. So
wages are a touch soft.
Canadian employment really strong.
Yeah.
120,000
pushing. I picked up some euro at 22, so I'm pretty stoked about that. Let me go over
a double win for dollar CAD.
Dollar CAD, yeah.
I'll pull up the CAD. Sorry, dollar CAD getting smash-oled. Oh yeah. So here's the
question
thing,
is,
guys.
Is this enough for the Fed to do something about it? I don't.
Well, it's gonna have. This is kind of what I was hoping. Weak number, right? We get a weak number, pushes stocks to highs. You get the dollar weakening. I mean, this is like the perfect storm if you're a bull. I mean, because you're like, okay, well, the data is bad enough, but it wasn't like, I mean, actually, it was pretty bad. So I don't know what I mean.
Yeah, the unemployment numbers were very good actually, and same with Canada. It went down to 6% from 6.7 or something like that. So not bad. So people are coming back to the workforce, but the question remains though, the quality of the jobs is. Remember, this was the issue before COVID.
Yeah.
Anyway, yeah.
Well, let's I look at the Aussie dollar, and the Aussie I think is very manageable risk from this point forward, because this is the big, let's not forget where the Aussie's at. This is the 38% retracement of the post-COVID move. I just picked up some Aussie dollars here at 80. So I mean, it's like, shoot, I'll pick it up at 80. I'll pick it up at 75 now. It's like, look at stocks. They're going to rip. I mean, we're going to see the S&P like rally to highs. I'm sorry, Dale, you have an interview, right?
Yeah.
Gosh, dang. You normally don't do those on Fridays. I told you.
Well, I keep them open for when people can't make it their day. And it's a good makeup day, or if we have a special, because a special guest to bring them in,
cool.
Gives me flexibility.
Yeah.
So Christopher is here.
Okay, great.
House.
All right. Well, hey guys, I want to say thank you all for joining us today with us, the Forex Analytics team. But don't go anywhere because Dale's going to take you through a really good interview. I'll be here listening myself. I just want to say that if you haven't tried out Forex Analytics, this is the perfect time to do so. Jump in the trading community. We have probably the most active chat room, literally. This is from the time I woke up, or got in front of my computer, which was literally 2 hours ago. Right there. From right there. And that is just the general chat room. That's not talking about any other chat rooms. And we're just discussing markets. And there's, it's probably one of the most active communities out there. So try it out. $1 for 10 days. You should do it now, because when we have our New Year's special, we don't give trials. We just give you a really discounted amount. So you try us out. We'll see you there. Dale, it's all yours. Thanks, everybody. Ryan, Stelios. I'm sure Steve was listening in. Kman. Thank you guys for all of your input. Dollar Canadian is getting smashed. All right. See ya.
All right. Thank you, team, for another great week of laying it out all on the court for our community. And Christopher Aaron, welcome back to F.A.C.E. How are you, buddy?
Hey, Dale. Doing all right, man. How are you?
Good. I'm glad you remembered. And I want to acknowledge that the last time you were on, you talked about silver having broken a formation, a structure, that you had a $19 objective that was a real good contrarian call at the time, and do you still think we're going there?
Yeah, thanks for remembering that. Unfortunately, I still have nothing to negate that lower target for silver. The specific target would be 1845.
Okay, are you going to share your screen, Chris?
Yeah, let me do that. Let's see here.
You could put up the video if you want to be on TV.
Yeah, let's do that too.
Oh, yeah? Okay.
Oh, what does it say here? Can't start your video because the host has stopped it. It's telling me.
No, on share screen?
Oh, there we go.
Yep.
Yep.
Okay.
Can you see my screen now?
Got it.
Great. So, I actually wrote an article on this just the other day that I think people would be fairly interested in. It's over on a site that I do some work for, Silver Phoenix. Let's see. So here's the article, and I'll take you through it. Not the article. I'll take you through the analysis in real time here. But I just want people to see it if they would like to see it in written form. Silver price forecast: a major low is close. So here's the thing. We are. Let's bring up the silver chart now. We still have a reasonable expectation that there could be that lower target. We're looking at the 10-year chart right now for silver, and the target was derived. If I zoom in here,
by that broken trend line.
Exactly right. And so you had this triangle right here with the turquoise. I use turquoise to denote broken trends, and blue is still valid. And so when we broke this right here, it was the amplitude of this triangle. It was $8 and change from the breakdown point, gave us a target down here at 1845. Now, so I have nothing to negate that yet. I will say that there was a bullish reversal in here. When we saw the attempt at the breakdown, this is like a year and a half now, almost a year and 4 months. Support here above 21.
You had a false breakdown. And it did look like it was going to go. Everyone was calling that a head and shoulders formation, the bottom, head and shoulders bottom, and then it broke out and then negated the formation, right?
Yeah, that's exactly right. So we're in what's known as sort of like chop land right now, chop zone, where, every attempt to move lower is getting negated. The attempts to recovery are getting negated. It's just going to chop and grind for a little while here.
Where's your blue channel line come in, Chris? Say, this is what, a monthly or weekly?
This is a weekly chart that we're looking at right now.
Okay, so approximately, where's the bottom of your blue channel coming in, like now, and then you could extrapolate it out.
Yeah, so right now it would be down here. Let's call it 20.
That's what I'm looking for.
Yeah. And then, so the thing is that my targets don't have to get hit precisely to the cent. What we're talking about here is it looks like, and it doesn't have to be right now. There could be one more bounce here for the next month or two.
23.5 maybe.
Yeah, there you go.
Yeah.
And then then it looks like silver wants to do one final kind of plunge. I could see it even doing something like registering below 20, get all the bears out saying, see, silver fell below 20. And then that marks the absolute bottom. But the bigger picture that I was talking about in that article that I just brought up, that I'm trying to have people remember here is, look, we've already fallen from 30 down to 22 and change. So it's an $8 decline. If I'm saying max, there's another $4 downside, and probably more realistically, it's like, $2 or $3 downside. Most of the downward move has already happened right now, but this is where people are now abandoning the sector, and it's the exact opposite thing that they should do.
Right. It was 9 on the DSI. That's a daily sentiment indicator. So that's
is that right?
low reading at one point this week, 9. It's 12. It's hated again.
It's totally hated.
Yeah.
The only other times that I remember seeing this over the last decade were back in this low in 2018. It was very hated. And then back in the major bottom, late 2015, it was super hated. So, big picture, the thing for people to remember is what's happening right now. We had this basically like a 7-year base. You had a terminal wedge that first formed, and then just a slightly downward sloping channel. The big breakout was here in March of 2020, April of 2020, excuse me, into the second quarter. This breakout in here, this impulsive break above the previous 7 years of basing process. So you had a breakout. This is like the first step forward. All that's happening right now is we're coming back to basically functionally retest the 7-year base. That would be very normal, very healthy price action. We're basically in the window here. I would say you got maybe 6 months or so. It's hard to say the exact timing, but you're in the window to be loading the boat on, let's say, a retest of this base. Because then the next move takes us up here to 35, 36, 38 for starters. We'll talk about, when later on in this decade are we going back to 50. So unfortunately, the psychology is the exact opposite of what it should be right now. Everyone was super bullish up here at 30, and everyone's abandoning it here at 22.
When you were talking, Chris, about, numbers that you come up with, they don't have to be hit exactly, you're not Nostradamus. Write this down. Don't expect perfection at the crap table.
Yeah.
You know what I mean? Or close enough for government work.
But the thing is, some people, when you don't get it to the cent, they say, throw out the entire system. Therefore, technical analysis should be thrown out entirely. It's like
evil, man.
Right.
Witchcraft.
It's like, look, you have to stick. You have to work on a discipline and say. It's like driving a car. You're never right in the middle of the road. You're never perfectly on your route going to your destination. Does that stop you from getting in the car and attempting to get where you need to go the next day? It works most of the time.
Yeah. Okay. So accumulating, how else, besides the physical, you do anything in the minors?
I sure do. I do a lot of work in the junior space of the minors.
Okay. It'd be interesting to see what you're looking at. Junior is past the exploratory stage. They're developing the mine now. They found it. They're going after it. Right?
Yeah. You know what? I do everything from exploration through development.
Okay.
Right now, I have to say that I would favor the advanced exploration and development stages of the spectrum. It's just so undervalued relative to where silver is. I don't have that chart here in front of me, but a lot of the junior silver miners are trading as if silver is still 16 or 17 bucks.
Okay, you have a couple symbols.
If you compare, let's see.
Because are any of them in SILJ?
Yeah, SILJ actually tends to have some of the more mid-tier, even though it's called the junior fund. It's really more like a mid-tier fund. But if you check out, for example, Southern Silver Exploration is a good example. It's trading well below its 2016 peak, even though silver, as you can see, is well above its 2016 peak. And has there been dilution in that stock? Yes. Symbol for that one is SSV on the Canadian Venture Exchange, or SSVFF on the US OTC.
They play lots of games with paper on these.
They do, but they also have been expanding their resource the entire time. So,
Okay.
you know, there's risk everywhere, but if you can have a company that's, as they're issuing more paper, they're adding more metal to their balance sheet. That's just one. I'm not actually invested in them right now. That's just one that came off the top of my head.
Okay.
One that we
I'm
are
interested.
invested
Maybe,
in here
you know,
in my service is called Brixton Metals. Is a company that we've just initiated a position in. BBB.
Where's that traded?
BBB is on the Venture Exchange. Is the primary.
Oh, okay.
And BBBXF.
Is that what used to be the Vancouver Exchange?
Yes, that's right.
Okay. So have you ever been bitten by a barracuda or a shark in that on that trading floor? Anyway, I'm just saying that maybe it's changed. I mean, Vancouver had a terrible reputation. Remember Brex? They threw some guy out of the elevator, helicopter. Anyway,
that's why proper diversification is key. I mean, anyone who had 100% of their money in Brex deserves to have lost everything. You know.
Okay. Yeah.
But if you have no more than 5 to 10% of your mining portfolio in one name, and your mining portfolio shouldn't be 100% of your overall net worth. So therefore, you know, each position is a couple percent max. Yeah.
Okay. You're a pretty disciplined guy. So I know you talk a lot about the metals. So do you advise on other asset allocation? Are you involved in the equity markets, crypto? Because you've mainly been talking, I know your handle is, you know, precious metal related, but it sounds like you're doing other things too.
I do focus on the precious metals and then the rest of the commodity space. So I'll get into copper, into energy, to some extent, into some of the industrial metals.
Okay.
I do not offer financial advice, so you know but it is what I am doing and what I would do in one of my client situations. The research and the analysis to back up what I would do if I was in your situation.
I see. And the dollar you think is peaked or peaking? I see you brought that up.
Well, actually, I heard you guys talking about the euro. So let me bring up my euro chart. I gotta. What's happening here?
You have some lower targets I see there, 105.20, 103.39.
So this is what I got for the euro, and what I think you're going to see here is something that no one else is presenting. If we go to the big picture monthly, so look at this. We're going back 1975, right? 1975 through, I mean, this chart ends in 2060. Okay. So you're looking at, you know, an 85-year timeline here, euro to USD. And you know the USDX is going to move generally opposite the euro because the euro is over 50% of the dollar index.
Right.
So I know there's a lot of dollar bulls out there. They've generally been right for the last decade, but I don't think too many people are looking at the long-term chart. What you got here with the long-term chart is a very clear ascending triangle from the magenta to the black. This is ascending. There's a slight expansion here of the support zone with relatively flat resistance. And by the way, before 2002 here,
that measures 2 1/4 on a breakout over 145.
Exactly right. And before 2002,
I've done a little chart analysis. I know a little bit about charts.
Oh yeah, I would say so. Yeah. You got my targets before I even say what I'm looking at. So
I'm sorry.
You know what I'm talking about. But so this is the big picture. You know, you've got an ascending structure here. Now, this probably is not going to break out above the black for good until sometime in the 2030s. But so if you take that and then you say, I'm not used to doing it live like this, so it's a little. There we go.
Yeah, you're doing great.
So then if we zoom into the structure of the last several years, right? And well, let's call this the last 13 years, that last structure. So remember, we're talking about this structure from this peak into the lows that we're in now. So let's zoom in, and you notice very clear 12-year downward structure breakout right there where my mouse is. Yeah. And then what? All we're doing is coming back to retest the breakout.
Yeah.
Slightly lower levels, and that can happen. So oftentimes people think when there's a breakout, you got to start a new bull market immediately. That's not the case. So Euro has broken out and now is expected to be in the process of distancing itself from the former downtrend. That takes a few years to play out. And then you start the next rising trend, which, I mean, at minimum, we're going to be talking 150 to 160. But like you said, Dale, I mean, eventually in the 2030s or 2040s, this is talking about over 2 to 1.
Yeah. Yeah. Okay. So, I mean, guessing the time of when, things manifest, that's very, difficult to do.
Yeah, it is. It is. It's just basically, so the reason, if you understand where we are here with Euro USD, and then you kind of start looking at, as I said, I focus on the rest of the commodity sector as well. We can use, we could talk about the CRB index. We could talk about where crude oil is right now. I mean, I'm not bullish on crude for the next maybe year or two. I think it's going to grind and chop and maybe grind back into the region of 40 or 50. But long-term crude, look at what has happened here. Massive 12-year wedge pattern. This is the peak in 2008. There was the low when it went negative in the coronavirus. And this wedge has broken to the upside. As I said, oftentimes a market needs to consolidate for a few years after breaking a long-term downtrend like that. But what's setting up here for mid-2020s and later is a bear market in the dollar. Let's go back to the dollar index. It's going to be inverse of that euro that we talked about. You've already broken the rising trend from 2008, 2011. We're going to stay below the rising trend here for the next year or so. It's going to work its way back into the region of 100. You're going to form something of a triple top here. Remember, it's the opposite of the euro. You're going to form a triple top. Eventually, you're going to roll over, break this blue trend, and the dollar will start a bear market. That's going to be the impetus for silver, talking about crude. Gold is going to lead
commodities, the way. Everything.
Commodities. That's why I focus on. And yes, a lot of these juniors are tricky companies to work with. You have to be very careful. I talk to management of these companies. I spend a lot of time on the phone with them. I get on a personal basis with a lot of these companies. You have to be super careful.
Gumshoe, where you get to know the owners. I think that's great to talk to management.
Yeah. But I mean, that's the setup. The big picture setup is that into the middle part of this decade and beyond. Actually, basically, getting back to silver, I think silver is a great proxy for what's about to happen here. There's another 6 to 12 months, perhaps, of grinding that needs to happen here. And the backdrop fundamentally why this needs to happen is that the market is caught between the inflation that we're seeing and the belief that the Fed taper, the bond taper, and potentially hiking interest rates a couple times next year is going to end the inflation. And I think as soon as the stock market has its first freak out at higher interest rates, you're going to see the Fed do an about face. Right. They're going to say, oh, sorry, we said we were going to taper the bond program. We said we were going to raise interest rates. Maybe we got, the Fed funds rate up to 0.25% or something like that, some absurdly low number. And they're going to say, that's it. Now we're easing again.
Let me ask you this. It's easy to understand a weaker dollar and higher commodities. Most would think that when you're talking about the stock market selling off or panicking before Powell reverses again, would think that the dollar would rally in a flight to safety, but isn't it possible that a bear market in the dollar could also translate into a bear market in stocks? Because who wants to own any US dollar denominated asset? Maybe they move to bourses offshore that could take advantage of the dollar weakening, and US underperforms the rest of the world. What do you think?
Totally right, Dale. I appreciate your perspective as well, because you've got a good sense of the history. Most people tend to only look at the most recent crash and therefore say that the next crash is going to be exactly like the most recent one.
Yeah.
But so they'll only look at, let's say, the coronavirus panic, or they'll go back one more and they'll look at the crash of 2008 and they'll say, well, people fled into the dollar in the crash of 2008. Fine. Go back to the post NASDAQ, crash, or go back even further to the silent inflationary crash of the 1970s, where you had multiple 50%, 40 to 50% bear markets in stocks within about 12 years. So, and that entire time you had a falling US dollar and rising commodity prices due to the inflation.
Right.
So I think it's very perilous. It's really a lack of
history.
Exactly right. It's defaulting to the most recent example out of. I just think it's it's laziness. It's not doing enough research on historical cycles.
Okay, so I want to thank you for being here, and I think you and I have kind of the same viewpoint going into 2022. It's just getting the timing, at least being close or reducing leverage or having no leverage, and begin to build positions when we get to certain levels. So I respect your work, not just because you agree with, not just because you agree with me, but looking at that ascending triangle you showed on the euro. I thought it could go to $2, but now I have a visual on how it could, and you shared that with us, and now I see it. So thank you for your contribution to my game plan.
Yeah, thank you. Let me ask you, Dale, what is your anticipated timeline for, let's say, the bottom in silver?
I think it's within the next 60 days, along with and because I think the dollar high is within the next 60 days.
Yeah,
I'm thinking so you're 98.
Okay, so you're a bit sooner than me, so you know it's fine. We don't have to.
But I'll tell you something. I'm always early, Chris.
Yeah.
All right. So I go in light. That's what I'm saying. You could begin to build positions without leverage or reduce leverage, and just sometimes the longer it takes to develop, the bigger the position you can build.
Yeah,
and if it happens like on the COVID crash, if you didn't act that day, you kind of missed the first 20%, 30% of the move.
Right.
So anyway, I appreciate it. I want to wish you happy holidays, Merry Christmas, Happy New Year.
Thank you. You as well.
And the best way for people to follow your excellent work is
they could just find me on Twitter. It's the letter I and then globalgold.com. iGlobalGold is the Twitter handle, and the website is the letter I and then goldadvisor.com.
Do you think gold could see 1,600 in this process?
Yeah, what I'm looking at for gold itself is, if we just look at the most recent structure out of the 2018 bottom, it looks to me like it wants to crack this first attempt here at this recovery. It looks to me like it wants to come back to the black one more time.
Yeah.
Which is so maybe not 1,600, but I'm thinking around 1,650 to 1,685.
Okay, at least enough to take the stops out. That's a big prize, liquidating out the sell stops under 1678. People will flip to bearish down there.
Yeah, they sure
Oh,
will.
and Forex Gal saying all we need is a direct line to Jamie Dimon at JP Morgan, and he'll tell us every wiggle that the gold market's going to make.
That'd be
All
great.
right.
Then we'll continue this conversation from our yachts, in the
Yeah,
Caribbean.
we'll do that. And Jamie, had to walk back his comments on China, so he's not as big of a big shot as I thought he was.
Yeah.
Okay,
just
go
on the
ahead.
topic of gold, if I could show people one more chart. So we were just looking at gold in US dollars. That's that, right? It's still not a bullish chart. It's sort of a grinding. It's still a grinding consolidative chart.
But in other currencies, it's flying because the dollar's been strong, right?
Yeah, and you know which one I follow the closest of all is gold and Japanese yen.
Yeah.
For the reason that gold and Japanese yen were basically functionally equivalent for about a decade. You go back to this, 2011, 2012 through 2020.
Yeah.
Anytime you have a chart that's consolidating like this for almost a decade, it means the market was treating these as functionally equivalent. And then we saw this massive breakout. Now, the thing is, it looks dramatic. We're looking at a linear scale, but you got to ask yourself a question. If a market's consolidating for a decade, is a move above the previous all-time high 157 to 200? That's only that's only a 35% move. Is that enough? Is a 35% move enough after a decade of consolidation and a breakout? I don't think so.
I don't know.
So you just zoom it in here, gold to Japanese yen, and you look at the structure from, the breakout back here 2019, and look at just what happened here at this peak. It exceeded the peak from May of this year. This peak in US dollar terms was that 1920. So gold and Japanese yen just exceeded that peak, now look, you're breaking the structure again, the most recent attempt at a structure. So what it's telling me is that gold and Japanese yen needs to maybe come back to 195 or 190. It needs to, this entire consolidation is going to be 2 to 3. I mean, we're already almost 2 years into it. Maybe it needs one more year, but you've broken above that major swing peak here already, gold and Japanese yen. This is not a bearish chart right here. This is a chart
like a handle.
It's a beautiful cup looking handle. Exactly right.
Yeah.
So you look at that as the currency that was the safest currency in the world for the previous decade.
Yeah.
Gearing up, maybe for a 2022 breakout. And I'm telling you, gold in US dollars is only going to be about 3 to 6 months behind gold and Japanese yen. So gold in US dollars needs to do its thing. It needs to frustrate some more people here. And then it's going to be ready, probably late 2022.
Okay, buddy. We'll be talking before then. So, Christopher, thank you very much. You're my trading warrior brother, and I root for you.
Sounds good, Dale. I really appreciate being with you, and all the best to you and all the listeners.
All right, buddy. So
Peace.
That's it. Peace. Don't just count your gold bars, count your blessings. And thank you, Chris. Paul, have a great weekend. Everyone have a great weekend. Thank you, Laura. I'm glad you enjoyed it, Brock, Ingmar, and you could join the team in 12 minutes for the Morning Edge. See you guys Monday. Have a great weekend. Adios. Shalom. Happy Hanukkah, Barry.